OMNIPOPS day trading signals for options, for not only options but cheap options, and cheap options with high deltas, and that's the best. Why is that the best? Because when you have an option that has not much premium on it, therefore it has very high deltas, or it could have some really good deltas that even with a little bit of a movement in price can have deltas up in the 80s, 90s, and 100s. And so what types of options are these? Well, they're short-term options, and they're moderately in the money, but not too far in the money, because we still have to stay cheap, right? We need to have a low price option. Now, why? Okay, well, why not? At this point in time, this is what we're, getting. Okay, this is what people are needing and wanting. And but regardless, if you have a cheap option that's low in price and that has high deltas, well, even with a little bit of a move on the underlying stock, you can not only make a nice payday in the day, right? You can make a very good percent return. So especially with IBM options, they're very inexpensive, at least at this point. And Caterpillar options, they're pretty well priced to this point in time. And premium will increase and decrease based on the volatility or the anticipated volatility. And so you have a lot of opportunity. Regardless, cat options over time, that's Caterpillar, that company that makes those big yellow machines to move dirt around and stuff like that. That boring sounding company has had a very good stock over time. Now, it's not the most dramatic and exciting, but it puts in some very good moves relative to its options pricing. So therefore, you have very good opportunity, right? And IBM is getting a little perked up, and it's not going to, well, I can't say what's going to happen in the future, but IBM currently and over time has not put in huge, massive moves on a regular basis. Okay, a point, 2, 3 points in a day. And the thing is, that's good too, because that can give us another edge. Options market makers usually won't put too much premium on such a low volatility. So you can just look at an options chain and you can compare week to week, and you can see the premium and the deltas as IBM moves through the week, or from day to day, and you can get a picture of what you're going to get paid in 1, 2, 3 days of price movement. Here with OMNIPOPS, we are trading 1-day pops. Okay, why? Because that's what the system is, and we developed the system out of what is in the markets, right? We're not trying to force this, neato concept of a 1-day pop. We're trying to find opportunity and reverse engineer out a system to take advantage of the opportunity on a regular basis. So I wanted to show you some recent trades. Now, we had a couple of videos on this June 1st, 2023 pop day, because it was just, extra fun. It was a very nice, robust pop. Caterpillar went up like 18 points, and 17, 18 points, something like that. And we had 1 day to expiration. We had very little premium on the option. Okay, and the options were very cheap. Here for Caterpillar at 2.91 with very little premium. meaning that if Caterpillar does put in a move, it's going up right into high 90s, 90s to 100 delta right away, right? And so we had a very nice pop, went up, and we had on one day, we turned those calls from 2.91 into 18.25. So the example was, let me go get the example. The example here is this, and okay, yes, if you bought here and sold here, in one day we got in before the close, okay, like we usually do. Sometimes we do the breakout pop the next day, but we got in by the close, and we got out the next day before the close. Okay, so we turned 2.91 into 18.25 for $15,000, $15,340 paycheck for the day on 10 contracts. Okay, that's the math for 10 contracts. But what if you're trading 20 contracts or 100 contracts? If you're trading 100 contracts, which some may do, because these are cheap options as well. And of course, if you have a lot of money, you could trade a lot more. But if you had 100 contracts, that'd be $150,000 paycheck for the day. Pretty sweet, 627% return. Anyways, I don't want to get too carried away on this example because it's not the norm. But you can look around and you can see some of these moves on Caterpillar have been pretty big. Well, okay, we got in on the close, so we have to cover 5, 10, 15, 16, 17. So got in here, got out here. All right, so you can see there has been some big moves. All right. Okay, so we're not done because we had one nice move. We just trade this system, right? We just do the deals. Over here, it's going to get a little boring when the market's going back and forth like this. But then we just have to just do all the deals. Don't get too emotionally involved. Time to make the donuts, right? Just put on the trades. And then we'll get our cycles of good price action movement, as you can see here in Caterpillar. So, good as in good price action. Okay, kind of boring here, not going very far, doing very much, and then all of a sudden, kaboom! Right, back down. Then we're slowly going along, making a little here, maybe losing a little there, and then we get to nice swing action here. So we're seeing a cycle of sorts, and that's good to know in perspective. All stocks do their cycles. Some of price action, some move around a little bit more smoothly on average than others. Okay, but anyways, point is that, all right, so we took out this move. Okay, no trade for this day, right? We bought here on the close. Bam. Okay, whip back around. Had a decent profit. Now today we get another. What was that? What was it like? 8 points? Oh, let me just get over the bar. How about that? Yeah, 8.87 points gain. Okay, and that's going to be relative to where we got in by the close the prior day. Okay, so you can see this system's track record, and the nice thing is, for us, we started putting the trade out a little earlier, and that's made things easier for us versus that scramble in the last 20 minutes, which we were doing before. That's just too little time. So we got into the groove here, and it's gotten more fun this way, and it's okay. So we get in at about 3:30, exit the other position at about, on average, 3:30 instead of 3:50. I mean, that's what we do, and that's the signal we put out, because we have to get you this signal well before the close, so you can decide if you want to take action on it. Now, that said, when I said the word decide, we are running a system here, okay? In a system, you take all the trades in a row and you don't guess, right? But you don't have to use this signal service as a system. You can get the trading idea or as a trading idea, and then look at the chart to see if you like that trading idea. Then if you like it, if you want to trade it, then you trade it. So those are two standard approaches to using signal service. Anyway, so we go on here, and so here's bought at 4.3, exit at 5.75. So when we use the cheap options with higher deltas, we usually get paid for our efforts, or I should say the stock's efforts. So when you use options that have too much premium on them in the short term, you often won't get paid for your positive moves in your stock, and you may even lose money even though your stock went up. So you have to play the premium versus delta game, premium decay rate versus delta game, in order to make money, right? And that game has to be coordinated with moves on a price chart. Okay, so then we have today's trade, or yesterday's for today's exit, and we got in here at 4.4 and then exit at 11.9. So this is fun, right? We have to enjoy when the markets are putting in good moves. We have to be there for them too, because when the markets or Caterpillar gets really stodgy and seismograph looking, in the price, that can get a little annoying, right? So anyways, divided by 4.4, so 2.7, 270%, getting close to a triple. Okay. IBM 2.76 to 3.95. Okay. So anyways, regardless, this is a system, and let me go back to the page here. And I mean, I like this system. I like RC1 Pro. We're going to hit another video on that. Okay, so it's fun, right? Trading these cheap options. And where are the tracks? Down here somewhere. Okay, so you can see here's a sloppy rendition of the tracks we can see in the row. That is hard to read, isn't it? Okay, here it is on the spreadsheet, and you can go down here, okay? If it's a losing trade, it has a negative number. And you can see the progression of points, running totals here on the right, okay? All right, so Caterpillar and 180, okay? Oh, here's Caterpillar, yeah. So 180 points in 3 months. This is how many months here? September. 4 months there, and then 1 more month here. So 38 plus 55. 93. And that's really good for IBM. All right, so all right, you can look at this from the link below, or just go to besttradingsignals.net and click on OMNIPOPS. This is the cheap options edition. There's a Nadex version, okay, that's dealing with spreads here. The potential to make a lot of money with OMNIPOPS is definitely there. Can't guarantee future performance and all those disclaimers, but we like this system, and I think it can be a great thing. All right, check out more info below. Thanks.